solve it one by one. Okay. So see, so we are going to classify this lease. Okay. So there's an entity who's leasing a machinery. The fair value of that machinery is $350,000. There is a lease payment for $100,000 per year, which is due annually on 31st of December. The lease term is 4 years and the asset life is 10 years. The entity's incremental borrowing rate is 10%. The lease does not transfer ownership. There is no purchase option. The asset is not specialized. Now, guys, unfortunately, I don't have a pen tab here. So what we'll do is we will, I feel like a handicap when I don't have it. But anyways, one second. So look at this, right? So if I look at this question, see, STOPS. What are you supposed to do? You're going to classify this lease in the books of the lessor and in the books of the lessee. So S, is it a specialized asset? The answer is no. Second, T, is the title transfership happening at the end of the lease? The answer is no. O, is there a bargain purchase option? The answer is no. So ideally what you will do, you will first try the S, then the T, then the O, then apply the last S because the tenure is very easy to calculate. And then in the last, apply the PV values. Okay. Anybody here who's not clear with the PV values? Because in our regular sessions, we've already covered that concept. Anybody here who's not very comfortable with the PV values, just remember here we're going to use PV of an annuity because there will be 4 payments of $100,000. Okay. So if I look at it, I'm going to have, see, so there are going to be 4 payments of $100,000. So 4 years we are going to have. So what we're doing is actually we're essentially bringing down the PVs of all the 4 years. So 100,000 at the end of 1 year, you're going to bring that down at today's day. Again, you're going to take 100 at the end of 2nd years, bring it down to today's day. So when you add all the PVs, you get the PV of the annuity. How much is the PV of the annuity? 3.16987. Right? So if I look at it, what is the value that you're going to get today? Is 3,69,987. How much is the fair value of the asset? $350,000. So if I look at it, what is the percentage that I'm going to have? It is 90.56%. So it's greater than 90%. The moment I know that, can anybody now quickly tell me how will you classify the lease in the books of the lessor and in the books of the lessee? The S, the T, the O, and the last S is not met, but the P is met because the PV of the minimum lease payments that the lessee is going to pay to the lessor is greater than 90%. How do you get that? I know 4 equal installments that I have to pay. I know the annuity factor. Multiply, I get to know what is the PV. So 100,000 paid at the end of 1st year, 2nd year, 3rd year, 4th year. Brought down at today's value is $316,000 odd. So how would you classify this lease quickly? Yeah. Pratik, quick. Yeah. In the books of the lessor, okay, it's a sale type. Everybody, is this clear? Yeah. In the books of the lessor, it becomes a sale type lease, and in the books of the lessee, it becomes a lessee finance lease. Everybody, is this clear? STOPS. Any of them met, it becomes a sale type lease for the lessor and the finance lease for the lessee. Okay. Okay. Next question, quickly. Let's see who answers this first. Second scenario, tell me how you're going to classify this in the books of the lessor and in the books of the lessee. Example 2, how would you classify this in the books of the lessor and in the books of the lessee? Yes? Anita, unmute. Explain how.
Because the economic life is, I think, more than 75%.
So it is 7 out of 9, right?
Yeah.
Which is how much?
77%, I think.
Divided by 9. Yeah, it's
78%.
77.7. How are you going to classify it in the books of the lessor
The sale type,
and the lessee?
finance lease.
Great. Anybody, any